Good morning, Tasty Nation. Mark Hawaiiantrader here. Let's take a look at what I'm looking at for today. So I love Tastyworks. Their grid page right here, and I have a drop down menu here, and I kind of watch the market. These are the future markets. I look at this a lot. I usually have this on my screen in the background so I can just kind of watch what's going on. Excuse me, in tile mode here. But market's not open yet. It's early. It's earlier in the morning. So what I usually do is I still use my thinkorswim charts. Oh, by the way, Tastyworks, this platform is free. This is the one you've seen a lot about where I do all my trades and whatnot. It's a really visual. If you want to get this, it's free. Just scroll down to the video here. There will be a link to Tastyworks. You can get it for free. Okay, so that's another thing. That's one. No, this is what I used to look at a lot. This is the old thinkorswim charts that where we used to trade at before. Now we all moved over to Tastyworks because the commissions is just unbelievable. The technology is the best, and they're a game changer. They're a major disruptor. Let me show you what I mean about that real quick. So if you go to that link, will take you to Tastyworks over here, and you can go ahead and open your account. It's free. You don't even have to put in money, but if you don't put in any money after a certain time frame, you'll still have the account there, but it costs money to get the live quotes, so you'll be on a delayed quoting. I mean, you won't have a direct feed until you fund it. But they give you direct feed quote, direct real time. Excuse me, I can't think right now. It's kind of early. Real time pricing, quote pricing, for pretty long grace period there. But after a while, because it does cost money for Tastyworks to get the feed, you can still use it, but the quotes will be delayed. But Tastyworks, if you go to tastyworks.com, this is just great. If you look at the pricing for what we do here, options trading, it's only $1 to open the trade, and there's $0 to close the trade. That's it. It's really basic. It's a nice one-page pricing thing. Okay, it's just awesome. So it's just great. It's a big thing, especially if you have a small account. Okay, you can trade, the saying is trade small, trade often, and you'll see what I mean in a minute. So it's kind of like you want to get you want to trade with a high probability of success, get in, get out with the highest chance of not losing money, and then repeat the process. But you can't do that if the commissions are too high, because it just eats into your profits and there's no money to be made. I'll go over some examples here. So they broke the barrier and they pioneered this. Their character and their integrity at Tastyworks and Tastytrade is unbelievable. They allowed the little guy. This allows the little guy to trade just like the big guy. All right, if you got $10+ million, or you got, I don't know, $25,000 or even less. Okay, like $3 grand. Okay, this allows you to participate and play in that market. And the neat part is you can put on the same types of trades. So, and you can use this platform right here to do it. Again, I'll go into this a bit, or you can watch my other videos. It'll show you kind of what I look at there. Now, again, the market is closed right now. It'll open in a minute. So here's my thinkorswim software. Now, the guys that started Tastyworks, okay, are the same guys that created thinkorswim. But thinkorswim was there was a public company. thinkorswim got forced to sell out to TD Ameritrade. So now TD Ameritrade owns it, I believe. And the guys at Tastyworks, Tom and Tastytrade, said, they did start to build a better platform, and that caters more to the retail average investor. So that's what they did. So here's what I'm looking at for pre-market. So right now I'm looking at /ES, which is just the E-mini S&P 500 futures. Most of you will not be trading this. It is kind of large, and it's large. It's $2,434 a share. But I use that because this is like, you can tell where the market is. Most of you will be trading SPY. So if you type in SPY, okay, it's $243 a share, and this is a derivative of the ES, the futures. So Here are the futures. And here's what happened. Here's what happened yesterday, which is kind of neat. Little market recap for yesterday. So here's Friday, right? Market close. I'll zoom in real quick. Right around here. Boom. So here's Friday. Market close right around here. Over the weekend, it's coming up in, and here's Monday. Gap. There's a gap up opening. It closed here and opened up here. It's called a gap up. And usually when you see that, and you want the market to go down, that's a good sign, because what you want to do is you want to gap up. You want to go from here to here. Now, most people do not see this gray shaded area because usually this is, after hours. So a lot of people don't see it. I have my chart set up to see it. If you don't, it kind of looks like this. In fact, I'll show you what a gap up looks like. I think I can do it from here. And then I will take out this. Watch, just for fun. Boom. See, it's gone. So now all you see is, oh, this is a 15-minute chart. So I will go, and here's the days, right? So here's, this tick is, I'll go right here. This tick is Friday, and then boom, gapped up, Monday. This is a 15-minute chart. If you look at a daily chart, it looks more, it's a lot more prominent. But I like to see what's going on in after hours. So you can go to your gear here, and what you want to do is you want to go to what you're trading, which is the futures, and I'll just put this back on like that. And then I can see it. Anyway, so this is what happened Friday. It gaps up, but then look what happens. Usually when you see a gap up, you look for it to close that gap. So it gapped up from here to here, right? And then look what happened. It filled the gap pretty much. See that? Close that gap. Now here's why that's important. For me, I'm looking out for, I want follow through today. So on my 15-minute chart, which is, where is it? Right here. Okay, I'm looking for it to cross below this solid white line. And look what happened after hours. It did that. Okay, so but now this is today. So this is overnight and this is pre-market. And I'll scroll over a little bit. So here's today. The market's going to open in a few minutes. Well, and I wanted to test this and then fail down. Okay, and then try to break above, right? And so I'm looking to see if overnight, well, I'm looking to see if now when the market opens, will it go above or pre-market or overnight highs or below overnight lows? So here's the low, obviously, right down here. I want it to go below that. If it goes below that, it should continue downwards. Also, if it goes above overmarket highs, it should continue higher. So you can just kind of eyeball it. Here's the high, see? So I kind of wanted to test 24.37 and then fail. All right, that'll be good for us, because what happens is, I'm going to hit this. It'll translate to my daily chart here, and I'll zoom in again. All right, and now as you can see, my Bollinger Bands are narrowing, so I'm looking for a bigger move, and I wanted to go to the downside. Now if that happens, right, I want this to go red and I want this to continue down. And why? Because this will cause IV rank to pop up, and when IV rank pops up, we can sell our options for more money. Okay, they'll be at it. We can sell them for inflated prices, and because the volatility will overstate their price, and then we can buy it back for cheaper as IV rank collapses, which is this chart right here. So you want to sell when IV rank is high, and we'll buy it back when it's cheap. So sell high, buy low. Now remember, if you go back a couple videos, you'll see what I did on QQQ. So if you go to QQQ now, it's market's not open yet, but if you recall what I said, I wanted to test a 140, 141. I think I said 141. I'll go back and look. But that's kind of look at what's happening. And then I still wanted it to fail after that, because see the high right here? I don't know if I can just, hold on, let me slide this over real quick. Yeah. So shot up high, here's the low, and I kind of look for it to finish, to retrace kind of in the middle, which is where we are right now. Now this is important. If this continues to go higher, it'll go higher. I mean, if it doesn't fail here, it'll go higher. The reason why I'm hoping that won't happen is my OBV chart right here is still red, which means there should be more sellers than buyers, which will cause it to go down. And I just need this to turn over. The good news is that here's the basic slow stochastic everyone is used to. That red line has crossed underneath that yellow line, and I can tell by looking at the numbers here. So if I move my mouse away, you see it's 52.9876 right here. Watch, 529876, and where is the yellow? Yeah, yellow is greater, right? 54143. So that usually indicates a downward trend. It should trend downwards, but who knows? What do I know? I don't know anything. If anybody tells you, which way the market is going to go, they're full of crap. I always say that. So run. That's what I want to happen and what I hope to happen. Now, what will happen is anyone's guess. So let me go to the futures for the QQQ, just like the E-minis, and that's over here. It is /NQ, which is right here. Okay, so now on that futures, you notice it's a red candlestick, right? I'll go back to QQQ. It's blue. That's just based on what I want to say. They just trade differently a little bit. But that's why I look at the futures. It gives me kind of a quicker index. Now I want to go to my 15-minute chart. See, look. See how it gapped? Here's Friday, right? It shot up. We're like, oh, bad. But then again, I didn't care because I kind of wanted to test that. I'll go back real quick. I want to use the same charts I used the last time for you so I don't confuse you. Here. Here's QQQ. Here's the 15-minute chart. I wanted to test that 141 area, right? Well, look what happened on Friday. Shot up. The high was 142. All right. I was like, wow. And then, but the good news is, so I was wrong. It broke above the 141, and but then it failed yesterday, right? Which is great. This is what I wanted. And here it continued on in the afternoon. I mean, after hours. So it failed, and it didn't goose it up at the end, and then after hours, look what happened. So I'm looking for this to continue today. All right? Because if this can continue today, right now it's at 140.01. If this continues downwards on the 50, downwards, like I said, I want it to fail and come lower. And IV rank will pop. So that's what I'm really watching for, because out of all the indexes, I mean, I'll show you. Here's QQQ. Here's your IV rank. And again, these charts, if you want my charts, do me a solid, just hit like this video, hit subscribe, send me a message, and I'll send you my charts for free. In these charts, here's my IV rank, 38.9. I like that. I like it. I get excited when IV rank gets above 35. All right, it's a sign for. I mean, I really my ears start to perk up, and I really watch this. I've been really watching this the last couple days, the last week actually. As compared to, here's the SPY or the SP 500. Look at IV rank. Look, it's red, right? Red means the chances of you losing money is greater when IV rank is low. So it's not really in our advantage. Now, if this is complicated to you, don't worry about it. You would use, I'll send you these as well. I just call it my IV rank only chart. This is the main one you really want to look at, okay? Because it'll just give you these little indicators, but it'll blow up and make IV rank more prominent, which is the most important. Because you will notice that if you sell when IV rank is above 35 or in the last 4 years, you've basically printed money. So I'll go back to this and I'll do a 10-year chart like this, and I'll zoom out. Here's the SPY 10 years. Here's just the IV rank chart, right? And look how often it got to 35. And here's the IV rank chart. Here's 50 and 25. I love when IV rank gets to 50. But if you look, I mean, even if you did over the last, here's, I don't know, 1 year, 2 years, 3, here's 5 years. Look how often IV rank hit 50, this green line, okay? Not too often. Look at 2014. Holy, you know what I mean? But every single time it hit 50 or even went higher, it stayed less than a week. And the market always bounced back, the buy the dippers, right? But if you're selling premiums, which is the way we do, this is just beautiful. The problem is you have to wait. There are long period of times you have to wait before IV rank got to 50. Now 35 is all the way down here or so. So there was a lot more frequency there. But look how many times it hit kind of where my cursor, see this crosshair? Look how many times it hit that line, and IV rank hit that line and failed below it. A lot. So that's why this style has been working very, very, very well. All right. So as you can see, but IV rank is basically 0. I mean, that's just crazy. So I'm looking at stuff that the advantages is more in our favor. So that's why I'm sticking to stuff like QQQ recently. Okay. Now take a look at Dow Jones, DIA diamonds. All right, Dow Jones. Look at the IV rank on that, 7.2. You'll see if this bar is red, it's you want to do it when it's yellow or green. So watch when I do IWM. Okay, and these charts were all is 5. But as you can see, just a few months ago, a couple of months ago, IV rank was higher. Just gave it all up. So market has been very, very. I think that's just summertime. You know, all the traders are out this summer. I don't really see the. That's why I was actually surprised about QQQ. I figure it'd be kind of trading in a low IV, which is bad because we're selling high IV. But market should be relatively flat for the summer. But let me zoom in real quick. But it's just been climbing over the summer. Okay, but nice order. But if you look, right, it's still in that range, right? If you kind of bet that it would stay between these two ranges, which is kind of what we do, you've been printing money. But look at QQQ. We had this nice down move here, which is good, right? I kind of like, we're right in the middle, and it did go a little bit higher. I kind of didn't want it to go above 141, so I'm looking for this to fail, but I like IV rank like this. Okay, look at that, 38. Last time it hit this high was right here, and it did shoot up a little higher, and it took a whole amount of 1 day, and then it failed. So, but look how fast IV rank can climb. I mean, it went from here 17 to above 50 in a day, basically, right? So I'm keeping an eye on that because that represents opportunity for me. And you can do at least half a golden gecko. So if you go to your Tastyworks account here, you go to trade, you type in QQQ, and here's a full golden gecko. This is what usually you can put on, even if you're basic learning. This is not how I trade. I trade I developed a style that's been much more profitable and much more consistent. It avoids all the drawdowns. It's a little bit more complicated. You know, and that's kind of what I take my private coaching clients through on a daily basis. But if you're just starting out, this is what I did on my free forum and on my free YouTube videos. My free forum is at tastytrade.freeforums.net, and it's free. You can just sign in, log in, create a username or whatever, and it's free, and you can look through how I developed this process or why I gravitate towards this style. Now, back to this. I'll clear this real quick. A standard golden gecko is a specific type of iron condor. So you're going to go to iron condor, and mine is already set to remember what I look for. Okay, so this should be like this, and I hit go, and I'll zoom out by clicking on here a little bit, and I'll click this to see the percentages. So I'm buying the 1 cent, I'm selling the 1 standard deviation, and I'm buying the 2 standard deviation. Okay, so you see these dotted dashed lines, and here's where the stock price is trading now. The first set of vertical lines closest to where the stock is trading now, that's your 1 standard deviation marker. Okay, let me clear this. Okay, see these? I'll zoom in real quick. Here's your 1 standard deviation marker lines. Here's where the stock is now. The second set of vertical dotted dashed lines is your 2 standard deviation markers. So you want to sell the options here, and you want to buy them here for a synthetic strangle at a specific date and time. Anybody who's been following me know a golden gecko is not a normal iron condor. It's a specific type of iron condor that you sell closest to 45 days to normal expirations. You're going to sell the 1 standard deviation out of the money put, and you're going to buy the 2 standard deviation out of the money puts and calls. Okay, so again, you're going to sell the 1 standard deviation puts and calls, and you're going to buy the 2 standard deviation puts and calls. So what's great about it is I don't even care about the strike price. I just care about the percentages. So that's why if I use this toggle switch right here, you'll see I can toggle between the percentages of it making money and the actual strike price, which is in this case 132 and 49. But the neat part about using Tastyworks is I can find them quick in any underlying. All right. So look, I'll collect 92 cents or $92 per contract. My probability of profit is 73%. Right. My probability, if you click the middle, of making, wait, why is this like this? What am I doing? Oh man, you know why this is pre-market. So these are numbers are going to be kind of screwed up. But your probability of profit will be roughly around like 90%. So my quotes haven't been updated, so I apologize for that. But main thing is you get the visuals here, so it says pre-market. Anyway, so Um, that's kind of the visual what you want to look for here. Okay, the neat part is if you don't have Tastyworks, well, it's just hard. I mean, I can type in anything. Watch, I can put in SPY, and I can do the same thing, and it'll find closest to what I'm looking for. See, boom, 84, 84, close to, and you can adjust it manually. I can put in Apple, AAPL, and I can do the same thing. I love liquid stuff, right? Boom. Notice I don't care what the strike is. I'm looking at the percentages. What are my chances of being right? And if you notice, if it doesn't line up perfectly, see how it jumps? That means there's no price that lands up perfectly. So you're gonna have to pick your poison on stuff like that, right? And then I want this to be closest to the top to be 2%. The bottom I want close to 84%. And you can pick, you know, how close or how far you want to go if it doesn't land on it at the same time. All right. You can pick Facebook. You can pick. This works with anything. Is kind of what my point is. Whatever you're interested in, go ahead and do. Okay. So you see how easy it is. I don't look at what price. I look at my odds of being right. All right. So that's what I'm kind of looking at for today. The market's gonna open soon. I got Tasty Trade. I'm watching Tasty Trade, which is a great. These are the guys that created it. All right. And Vanetta's doing her daily dose, and I love waking up to that. So I will come back on if I see anything pop. Right now, I'm going to switch over to my 1 minute chart, and I'm going to go to the NASDAQ right here, and I have a watch list that's right outside my screen here, but I just kind of leave it like here, and then I take a look. All right, hope you have a great one. I'll see you guys tomorrow.